Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES balanced within a range, and at this point, heading into the open, our bias is very neutral, and the market can really tip in either direction. Holding above the 30 half to 31 half pre-market support would tell us that the buyers are still active in this market. On the downside, we have support at 22 half to 24 half, and it's an area that has been tested here in the overnight session, but it's still an important area of support, and it is still an area where responsive buyers can be active and they can defend. Now, if that area doesn't hold, then we can get some acceleration on the downside, and we could go into long liquidation for a move down into the 1914 and 1908 to 1910, and possibly even 1898 half to 1900 half. So how the market reacts to the 22 half to 24 half area and the 30 half to 31 half is really going to help set the tone for the day. If we are holding above these zones, and especially above 30 half to 31 half, then we know that buyers can still jump in, and the overall bias can still turn more bullish. On the upside, we have pre-market resistance 35.75 to 36.75, followed by the prior VPOC at 39, and then the initial resistance zone at 42 to 44, which marks the larger time frame balance area high. So that is active and valid resistance until it's taken out. The importance of this area is that in the event that the market continues to consolidate above pre-market support within this range, and if we do end up getting a breakout above 42 to 44, then that would mark a larger time frame balance breakout. Now, in order for that breakout to happen, we'll have to see broad market strength, sustained upside momentum, and participation from the other markets. Right now, one of the red flags in the market is the relative weakness in the Nasdaq and Russell, and essentially this negative divergence that's been brewing underneath the surface between the S&P and these other two markets. So ES has rallied quite a bit over the last couple of weeks, and Nasdaq and Russell have moved up as well, but not quite as much. And the weakness in those markets is weighing in here on the S&P, and it can hold the S&P back as well. So for those reasons, because of the mixed signals, where S&P is technically still short-term bullish, but we are trading at a larger time frame resistance area or near a larger time frame resistance area, and because the other markets are also near resistance and showing relative weakness, for those reasons our overall bias is very neutral. The markets can tip in either direction, and that's why it's going to be very important to be in tune with the real-time momentum situation. Keep an eye on the underlying volume to determine whether there is enough range potential to really get a sustained move, to the upside. But in the event that we do get participation from the other markets and sustained upside momentum and a break above 42 to 44, then we'll have to be cautious on fading at the resistance zones above. Simply because at that point we could be in a larger balance breakout, but we are going to have to see that underlying momentum to really support that idea. Otherwise, if the market attempts a breakout above 42 to 44, but there's no momentum behind it, or if the other markets are not participating, or the underlying internals are not really showing broad market participation, then the breakout is going to be more prone to failure, and we'll have to be more careful and cautious on even holding any longs beyond 42 to 44 in that scenario. So, you can see that we are either at or very close to a short-term inflection point here in the market, where either ES attempts a breakout above 42 to 44, or we balance, then get a failure and a breakdown below 22 half to 24 half. But until we get a move on either side of initial resistance or initial support, until either of those zones breaks, the market is neutral and balancing within a range. So, we have to be nimble and flexible with our bias within that range. and understand that until we get a big break one way or the other, the market is simply in a sideways range, and it can really tip in either direction, and it can continue balancing for a bit as well before it breaks in either direction. So that's the market context heading into the open. On the econ calendar, we do have a couple of economic releases out at 9 a.m. Central Time, consumer confidence and existing home sales. So, keep those reports in mind, because right around the 9 a.m. Central Time, even if they're not going to result in big market movement, on the smaller time frames, you can still get some volatility. So, manage your positions accordingly. So those are really the main thoughts heading into the open. Again, holding above 30.5 to 31.5. Buy side has a chance to step in, and 22.5 to 24.5 is really the final spot, which is initial support, and we'll also be using that as the bull bear zone. On the upside, 42 to 44 is really the main area of resistance, and it is a larger time frame area of resistance because it marks that bigger balance that the market has been establishing since early January. So, it is going to take a lot to break out of that. It is going to, take participation from the other markets, but it is something that we have to be open to because the markets have been slowly shifting value higher and balancing at higher and higher prices. So, we know that there is a directional move brewing underneath the surface, and we just need to be prepared for it. So again, those are our main thoughts. Let's see, which side really takes control today, and we'll take it from there.